Okay, Atul Suri joins us now. Atul, good morning. Thank you for joining us. Atul, markets always climb the wall of worry, and I think that's what benchmark indices have done of late. Crude at $75, interest rates a bit shaky, flows
That's
are a
right.
bit patchy, and Nifty is not far away from an all-time high and is in the green for the year.
Right. That's right. Yeah, I think it's that's been the nature of the markets. And what's important is this break above 10,600. The Nifty fell from 11,100, and it tried many times to really come up above this 10,600 levels, and it had a kind of a formation. Ultimately, it went to sub 10,000, but now the pull up and the breakout above 10,600, and that happened on a weekly close as on Friday, and you see a follow up today is very impressive. I feel that going ahead, the markets will push towards lifetime highs. However, I think, Nikuj, that going ahead, the story is not going to be so much the index, but more importantly, sectors. Because I feel there are a lot of macro headwinds, and you've listed some, with crude being where it is, US bonds yields nudging beyond 3. So I think that at some point in time, these macro headwinds will put a little bit of pressure. So you won't have a runaway Nifty. But interestingly, there's a lot of sectorial moves that are happening. Case in point are two sectors I would like to point out. One is IT and second is your FMCG and consumption. These are both sectors that have broken out. IT for sure I know is that most portfolios are underweight, and you will see a lot of gush of money that's going to come in there. With the currency also, the dollar getting stronger vis-a-vis the rupee, I think that makes the case even stronger for IT stocks. Consumption has been on a very, very smooth, steady path. And on the other side, you will find that with crude, which I think is heading much higher, contrary to whatever people are not willing to believe that. I feel that you will have spaces that will get hit. So all in all, you may not have a runaway kind of index move, but I think there will be a lot of money to be made inside if you're positioned correctly, sectorially or thematically.
Atul, do you think there is going to be a departure from financials or the BFSI space? Because if I take our tapes back, 2017, the go-to space was not IT; it was essentially BFSI stocks, and they have a very large weightage on the Nifty. Suddenly, they are in a sleepwalk mode, so to speak. What happens there now?
I think Nikunj is going to be very stock specific in that space. You cannot say that everything will be hammered. I think the biggest pain point is the PSU, and it's not just PSU banks. You can see it in PSU OMCs and other PSU stocks. So you have this whole financial space wherever the PSUs are still are really languishing. But in the NBFC place also, you will find that stock specific performances will be rewarded. And there are a couple of them which have actually broken out into lifetime highs and are zipping away. So I feel that it will not be that the whole sector will take a pause. I think performance will be rewarded. I feel going ahead with the quarterly numbers as they are coming, you will see what I'm seeing right now is that we are just like 4% from lifetime highs. The list of 52-week lows is pretty long. That means that stocks that do not perform, that do not give good numbers, or where there are issues, they are getting really punished. So again, in this whole NBFC place, you will find that stocks that perform, stocks that come out with good numbers, which have very good long-term trends, will continue and lead the market higher. But yes, it will not be across the board. And that I think is very good, because that's the same theme, mood you're seeing in the whole mid-cap, small-cap space. I mean, go back 3 to 6 months and you will find that any small cap, mid cap, however poor the quality was, zipping. In fact, the poorer the quality was, it was seemed to be zipping higher. But I think the market is in no mood to do that. You will see performance rewarded, and wherever there are disappointed will get smashed. And that I think is always a healthy sign of a market. And coming to your opening line, walls of worries, I think they still remain. It was North Korea, South Korea when I used to meet people 3 months ago. Now it's Karnataka elections. After that will be monsoon. After that, so those things will remain, and without that we will never have markets. So that is actually positive. I feel all in all that you will have sector, theme and stock specific moves. It will not be runaway index moves.
Atul, hi, morning. Since we're talking about troublemakers, how big a scare is crude? And considering you do track the crude charts as well very closely, we're already at 70 plus. There is talk that it could be 80 in anticipation of the Saudi Aramco IPO.
Yeah.
How big a worry could crude turn out to be?
See, I don't know how much of a worry it will turn out to be, Aisha, but I feel that crude is headed much higher. When people felt that crude would be capped at 55, 60, you would have shale gas, etc., etc. But today it's sitting at 70 plus and very pretty. Corrections are very, very shallow. Overbought markets don't give it much correction. So the trend is much higher for crude. My call is that crude will actually head towards 90. It's not in the short term, but I'm talking about the medium term. You will have corrections in between, but I think crude is headed much higher. And that will definitely affect, as I said, your macros. They are headwinds. There will be a pain point. And also, I think specifically stocks and sectors, like you're already seeing it in OMCs. I mean, these were great performing stocks a year ago, but in the last 3-4 months, they have absolutely got smashed. And I feel that this play or this theme will go further because there are a lot of companies that depend on their inputs or their raw materials based on crude and oil prices, etc. So I feel that next they would come under pressure. So as I said, that if there is darkness, there's also brightness. With the currency depreciating, your IT will do well. As I pointed out earlier, you will have your consumption theme that will play out very well. So as I said, there will be good and bad. But you just, as a portfolio manager, you will have to navigate and be overweight these themes, which I think are going to play out well for the next few quarters, and try to stay out of those themes or those places which are of concerns. So it's going to be an interesting market, as I think, going ahead in the next few months.
Okay, IT aside, but consumption, Atul, is turning out to be a very large theme in itself. I mean, there is pure play FMCG, but then there is urban consumption like a Titan, like a Jubilant, Interglobe up until Friday. You know, these are also all urban consumption themes, and these are the stocks which have had a beautiful run in the last 3 months. So what within consumption do you think is going to stand out best? What is it that you can still buy and still make money in the next 1 year?
I think food and food-related stocks look very interesting. Again, you can't carve out a niche. I know that the whole consumption theme can be spread across sectors. It can also go into two-wheelers and things like that. But what I find very interesting are the developments in the food and food-related stocks, the kind of chart patterns that are panning out there. Yes, they are very expensive. Yes, they run up a lot. But I have a feeling that those are showing special volumes and special price moves. As I said, there's no sector index to determine just that theme. But I think in this consumption space, I find food and food-related stocks to be very interesting.
Okay.
Atul, hi. What would be a contrarian theme in this market if you're picking any?
I think real estate. I feel that reality is a space which is showing very, very divergent charts. You clearly the leverage and unleveraged, less leveraged space. The less leveraged space charts are actually very, very good. And though when we see the market, we look at real estate or the indexes, it just seems pretty bad. But in that, there are a lot of bright spots. And clearly, if you try to figure out that what is common between these stocks where there are brighter moments, you'll realize that it is the level of leverage. So I feel that if one wants to get into a bit of a contra bet or get into something that's not very popular right now, I feel reality is a very interesting space. Again, as I said, for me, the theme would be that avoid spaces where there's high leverage, because obviously with bond yields where they are going and other issues that are always the risk with leverage, you would want to stay out of it. But in the less leveraged space, there are some very, very interesting stock-specific chart patterns. As I said, it's not fully sectorial in nature, but stock-specific, I feel, as a contra bet, or if you want to get into something less popular today, I feel there are some opportunities there.
Atul, about 6-7 months back, metals, I recall in your interactions with us, was the key sector that you thought is going to really ride the wave and it's going to be the dominant theme. That has gotten challenged off late, what with the correction coming in steel prices across the globe, and that's also rubbing off on some of the metal stocks back home as well. Do you think metals as a story has gotten challenged, or do you think these dips are to be bought?
I think they are corrective. The bigger theme is going to be the whole commodity run. We spoke about crude, but I also look at charts of metals underlying, and you find that they are actually going to be a part of a larger move. The only problem with metals is that they tend to be very, very volatile, which is the nature of metals. That is why they don't tend to ever look like secular trends. They tend to be very good for traders because you can have a good week and a horrible week and another good week. So that is how metals will be, and that's how they have been. Though I think that going ahead, looking at underlying commodity charts, if one is able to withstand the volatility, and mind you, the volatility is big. Those stocks move 7% up and down on a dime based on global movements overnight. So that's very difficult to navigate in the short term. But I feel that going ahead also metals and the whole commodity space I feel is in an uptrend, and money would be made. But yes, it will be very difficult to draw your inferences based on a 1 day or a 1 week price move, because that's the very nature of that asset class. It tends to be very spiky and volatile. But if you give it space, if you give it a larger space to move, and you have that kind of time horizon, I feel that there would be money to be made in metals. But again, the caveat being that they can be extremely volatile, but then that's the nature of that beast.
Right. Are any of the financial charts looking toppish in the sense that you want to book profits there? Broadly, where is the opportunity to kind of reverse course and take some money off the table?
I'm not bearish in the market. So, for me, sitting in cash, in fact, it's more an opportunity to deploy cash. Whatever I was sitting on, and I have used this correction to get into it and aggressively get into the sectors I spoke about earlier. So I'm really not about booking out, but still I feel that what will happen is that one will be, getting out of spaces or sectors which I feel will come under pressure due to this commodity and currency or these macro issues, and getting into these theme based which are more secular. So it's going to be more of shuffling that's going to happen. I'm not in the camp that believes that one should sit on high cash. Because my experience has been in our markets is that we are very horrible at predicting global events. When I was to meet clients 3 months ago, they were very and the Nifty was of course around 10,000. They were very concerned about North Korea, South Korea, and people were preempting a nuclear strike and a Nifty at 8,000. And today those very people are talking about a Korean, North Korea, South Korea unification. Now people are talking about Karnataka results. I mean, what is our ability as individuals? I mean, even those guys who are there in it don't know what's going to happen. So what is our ability? And then more importantly is what's the impact on the market? So I feel that these things are always great stories, great media headlines. We should do what we know, and which is markets and prices, which are in front of us and which is a reality. So I feel going ahead, you will keep having these ups and downs. That's why I said that you're not going to have an index move, but more importantly is stay invested. We are a part of a longer bull market, but make sure you're in the right spaces.
So I'll pick up a quote from a common friend of ours, Atul, and something which you also, a thought which you always follow. And the quote is from Rakesh Jhunjhunwala. You got to follow the trend. Where the trend will end, nobody knows. The trend will show its end by price performance. So let's talk about a trend where do you think the price performance is still very strong, and a trend where you think the price performance seems to be indicating that the trend is nearing its end?
Now, as far as that, I spoke about IT. I find that if I look at the IT index per se, I feel that there's a 20% kind of upside in the index. Most people will say, oh, 20% is nothing, because we've been so spoiled with what has happened in the last few years. And in this 20% index move, you will find that a lot of spaces, a lot of stocks in the mid-cap IT space look even more promising. So I feel that at the moment, based on prices as they are today, that seems to be an emerging trend. So that's something is there. Where the trend has ended, again, I don't think anything is topping out right now, but from my style, which is a trend followers basis, to go and pick PSU banks, yes, they will bottom out, and yes, they will go up. Even in the case of pharma, yes, they will bottom out. It's a great sector to be in, but when it will happen, how long it will happen, I don't have that kind of sagacity. I don't have that kind of perspective. So I feel that, as I reiterate, that consumption and IT is a trend that is emerging. Again, these are not, as the market stands right now, they're going to be calibrated moves. They are not going to be runaway moves. We are not going to see, I feel, going a few months ahead, a runaway kind of bull market. You will see calibrated moves, but even in this calibrated moves, there will be opportunities, and these are the two themes that I would play out on.
From tomorrow, Atul, it's May and the famous quote, sell in May, go away. So where is Atul Suri going on his next holiday?
Nothing in May actually. It's a horrible month to be in Mumbai, but well, have to be at it. But maybe June, yeah, some things are in the offing. Maybe summer in Canada, probably. Maybe, not too sure, but hope so.
Given that, you know, if you're planning your vacations, you have to keep one eye on the currency as well. Have you monitored any of the currency charts globally? What's happening with the dollar? What's happening with the rupee? We are trending again, it seems like, walking towards 67. I don't know whether that really comes up on your radar, but even so.
Yeah. Definitely. Currency, especially Indian bond yields and Indian currency are both not on a good wicket. I feel that the INR is heading towards 68. It's had a very sharp move actually from 65, 66 to 67, and I think it's heading towards 68. It may be less spiky. It may be a little slower, but yes, the Indian bond yields also are, you know, creating a little bit of pain and panic. And the Indian currency has spiked up when the dollar index has been actually benign, and now I find that the dollar index also has broken out from a bit of a rectangular pattern. So I feel that you're going to have actually a stronger dollar per se, and that's going to put this next leg of pressure on the Indian rupee. That's why I feel that we would head to around 68. So things are not pretty as far as the Indian currency and bond yields go. That's why you will see, as I said, that the Achilles heel for this market, or the pain point, is going to be banks. You can see it already that, you know, in a market in the Nifty, which is maybe 4% from its lifetime highs, the banking index is 11% from lifetime highs. So you can see the level of underperformance there is, and the whole banking space is ultimately now come down to just 3-4 handful of stocks. So that for me is the pain point. Banking has always been a lead indicator for our market, and I've really believed in that. So if you ask me the point of concern, the pain point, or where I would look for problems, I think it will be banking and the bank Nifty. If the bank Nifty does not perform or does not catch up with the Nifty, you will not have any runaway markets. You will in fact have a lot of pain and pressure, and that's, I think, something which one has to look out for. That is going to be the lead indicator for our market.
Okay, Atul, fantastic to have you back, and certainly hope to see much more of you going forward. And
nice to be with you.
Always great to get your insights.